All right, what up, boys? In today's video, I'm going to be going over the exact Bitcoin trade model that I took yesterday to make me over $500. Not some prop firm nonsense. This is all traded on a live account with the broker that I trade on here, obviously. BitUnix. If you're not in the free Discord, it's going to be the first link in my bio. If you're not already on BitUnix, that's going to be the second link in my bio. Make sure you join and make sure you sign up. Totally free. But first things first is we want to come to the chart. We want to identify our 90-minute intervals, right? And in this example, the trade that I took specific was the 6:30 p.m., right? What is that? Well, that is our fourth 6-hour candle of the day, which opens at 2 p.m. And of that fourth 6-hour candle, right, we are trading the fourth 90. So the last fractal of the day before that new daily candle opens at 8 p.m. Eastern Standard Time. So we have that marked out, and then the one thing that I want to identify is going to TradingView and going to the 1-minute time frame and identifying the fact that we have been failing, right? Bitcoin got this extreme push up, right? We put in this high, we revisited that level, but we did not spend a lot of time up there, right? We swept the high, as you can see here, and then from there we failed back down, right? And we have that third 6 and the fourth 6 right here. Now, what did the third 6 do? Right? We gave the open high, and then we sold off, and then obviously we gave the close, right? What did the fourth 6 do? Well, we gave the open high, sold off, pull back, and then going into that fourth 90, right, at 6:30, we can kind of look for what I was looking for when I was taking my short. We don't need to have any drawings. All we have is our indicator highlighting each 90 minutes. So 2 p.m., which is the fourth 6-hour, 3:30, which is the second 90 of the fourth 6, 5 p.m., which is the third 90 of the fourth 6, and then obviously the time frame that I traded was the 6:30, which is the fourth 90 of the fourth 6-hour candle. So what we can see, just some basic smart money understanding, is price was trending up. We got a clear breakout and displacing move down, and from this, understanding that we have the time shift here at 6:30, if we're going to catch a continuation short on the 90-minute, well then we want us to do the open high, pulling back into some sort of discount or equilibrium, right? And then catching the continuation short. And that's exactly what we did, right? And if we go to, actually, we'll go to the 1-minute time frame. And if we go to the 1 minute here and we go all the way back to that trade that I had taken, which was right around here, we can see that we gave that open high that I'm talking about, right? So let's see, where's the open high? Again, here's that trend line. We can see that we gave the breakdown, the displacing move, the continuation, but where do we get that pullback? We got the pullback here, and I actually ended up catching the top of this move. How was I able to do this? Well, I was able to do this by taking our Fibonacci and drawing it from high to low, right, of the displacing move. Not a random move, right, but the displacing move. The move that broke through our support, or in this instance, right, our upwards trend line, right? And mind you, notice how this happened, right, at 6:30, right? How the volume came in with the new 6:30 open. And again, understanding that price can do two things when we make a candle: open high, low close, meaning that we are going to make a bearish candle, or open low, high close, meaning it would be a bullish candle, right? And in this instance, because we were expecting to sell off, looking to take this short, we wanted to see the open high into our golden pocket Fibonacci, which is exactly what we had, continuing off of that displacing move down. And on top of that, there was an unfilled 5-minute gap right here, right? So you have your 5-minute gap, you have your displacing move down, you have your higher time frame thesis, understanding that we were selling off after manipulating in the morning, right? So then all we wanted to do was see the pullback to our Fibonacci, which we saw, the failure to break back above that key level, right? And then obviously, if we go back to the broker here, that's exactly where I took that short position, right there. And then as we swept out that first internal low where we drew the fib from, I took profit 1 there, right, locking in just around $263. And then I let the rest to run on this trade all the way down to the previous equilibrium of that push up. And that's it, right? All I was doing was using my basic smart money understanding on the lower time frame, using my higher time frame understanding and the understanding of the time fractal system that we teach inside of the Discord, and then pairing that with the 6:30, which is again fourth 90 of the fourth 6, right? Open high, caught the pullback into the fib, and that was the top, and we sold off for the rest of that 90 or 6 hour period of time. And that's it. Doesn't need to be overcomplicated. Entry model doesn't need to be super sophisticated or precise, right? Whether you enter off support resistance, whether you enter off of Fibonacci, whether you enter off of SCISD, IFVG, fair value gap, whatever. At the end of the day, it doesn't matter. What matters is understanding the higher time frame, having context and clear conviction with the high time frame, right? Because if you can read where the high time frame is going to go, then the lower time frame just becomes a super, super clear picture. And again, if you're not already in the Discord, it's absolutely free. If you're not already on the broker that we trade on, BitUnix, same shit. Get in there, stop trading prop firms, stop following your ICT mentors, and find a real group of traders. But listen, I appreciate you guys for watching. Make sure you drop a like, comment, subscribe. Let me know what you want to see in the next video, and I will catch you guys in tomorrow morning's live stream. Peace out.